So yeah, so like we talked about, just to make it small, a balance sheet, right? And then an income statement, and that's over that amount of time with the revenues, expenses, and the net income. And then you have another balance sheet over here, right? And then there's the cash flow down here, and you have ops and investing and finance. And so this might be money going out to buy stuff. This is money coming in if you get a loan or sell stock or something. And this is the add backs and takeaways from depreciation and accounts receivable changes and all that in operations. And then here you have your cash, right? And so that cash then comes up here to add it to this cash here, and that's your new cash balance, right? And then the net income, you might do some as a dividend out to the owners or something, but if you don't, the rest of it, or whatever is left over, goes into retained earnings, right? It goes over in here in your equity section, right? And then here's your liabilities and here's your assets. So the net income comes over there. So you can kind of think of the income statement as residing in the inside of the equity part of the balance sheet, right? It's really, revenue minus expenses equals net income is kind of a bunch of accounts that reside in retained earnings, sort of is what you can think. And here's your liabilities and here's your assets. Well, once you do these calculations and all, right, then these accounts get zeroed out again, and you start for the next time period, whether it's a year or a quarter or whatever it is. And so these go away. These are permanent accounts, the assets, the liabilities, and what happened in this time period is reflected in the retained earnings.
I can't remember what you always had as of. There was always like an as of date. Is that the net income, or the here is this, or is that the snapshot?
Well, usually, you'd have the balance sheet as of a day. Yeah.
It's a snapshot, right? It's a single snapshot.
It's a single snapshot of just one day. Yeah. So usually you have one at the beginning of a period. I'm just going to say beginning of the year and end of the period, right? End of year. Right, so it'll be it would be as of December 31st, 2018.
But it was the balance statement you're saying?
Balance sheet, yeah.
When you said, okay.
Yeah. This will say for
2018.
Or for the, from June 1st to, whatever okay. Kind of thing. Yeah. It has to be over a certain period, and this has to be on a specific date.
Okay.
Right, so this would say as of. So the closing entries close out all these accounts, right? Now you're saying, okay, it looks good, everything's balancing, we did the adjusting entries, it's all good. And then afterwards you do a post-closing balance just to make sure everything's good. So that's the checklist that you go through every time for every cycle.